Hey, good morning, everyone. Chris Lopez here, and I want to welcome you to our webinar. Now, we put this webinar together at the end of it last year because the market has changed with the increase in interest rates, and a lot has happened. And a lot of people ask us, hey, is there another big crash coming? Well, the answer is yes and no, but in times of market shifts like this, there's really two key things we want to focus on. One is, where is the opportunity? Because the opportunities we saw in the last market cycle, they are not the same. Secondly, and this is going to be a big part of the webinar, I was talking about what can we do in terms of portfolio optimization. So many people out there have rental properties, they're landlords, and they're seeing lots of equity. They're getting some good cash flow. But what can they do with their portfolio to make sure the portfolio is working for them and also working in this new market cycle? So I really appreciate you joining us. I got some great guys here in the studio with me. Paul and Jamin. We guys put this webinar together because we've been doing some collaborations.
Yes,
how are you guys doing?
Good. Hey, I want to thank everybody first for showing up on the webinar. Yeah, it's been going great. So Jamin and I have been putting some classes together, as you know, and meeting with people one-on-one, going through some portfolio analysis, talking about their situations. People got some rentals, kind of accidental investors where they've bought a house, moved out of it, and it turned into a rental, and they don't know what they have or what to do with it. So Jamin and I have been sitting down with them and going over some analysis and trying to help them figure out what they do with that equity or sell it, hold on to it, rehab it. So yeah, it's been going great.
You've had some fun ones, I'll say interesting ones the last couple of weeks, it sounds like too.
Yes.
Yeah. So we've had people reaching out from other departments. Adams County Fire had a firefighter reach out to us and had a conversation with him about a house he'd inherited. And didn't know what to do with. It's been sitting vacant for most of the time that he's owned it, or since he's inherited it, and just gave him some options on what it looks like if he sells it, what it looks like if he decides to rent it, and he was super appreciative, and he's also looking to retire here soon, so it's some income afterwards to supplement his retirement.
Wonderful. Well, I appreciate you guys, including me in the classes, sharing this information for the department. This is going to be a fantastic webinar. And last but not least is Matt Amundsen. He's on the Property Llama team. How are you, Matt?
I'm doing well. Excited to sit here with Jamin and Paul and you as always. But yeah, just like this, you guys helping out your community. That's something that we really focus on, is just helping investors make better decisions. I mean, we're all just trying to, like you say, get to a comfortable place in retirement, and I just really admire what you guys are doing. So thanks for joining us.
Yeah, thank you. It's something that we're really focused on with the Fire on Fire brand that Jamin and I are developing, is really working on educating the first responders, firefighters, try to make them have a secure retirement and kind of help them out. A lot of them need it. Some of us have to retire pretty early, whether it's due to injury or just getting old. So it's good to have other ideas in there in the box and look outside the box. So.
All right. Well, as we get into this, anyone watching this live or watching the recording, ask questions here. We love interactions, whether it's live on the webinar or afterwards. Shoot us an email, reach out to Paul, Jamin, or me or Matt, because the main goal here is to make sure you understand the market trends and then how you can optimize your real estate portfolio. There's lots of options out there, and the options have changed with the market shift. So the agenda today is we're going to go through some macro trends. So we're going to look back at what happened in 2008, and how we're going to repeat that and the type of opportunities that it produced. Then we're going to focus on what I think is the most number one important wealth building technique there is for real estate. And this isn't for buying a property. This is what you do after you've owned the property for a bit. We want to talk about, hey, where are the opportunities in the marketplace right now, since interest rates have gone up? And then we are going to focus a lot of this around portfolio performance, portfolio optimization. So we're going to use some real life examples from myself, Matt, some clients as well, about what moves people can make in the market out here. And we're going to be using a piece of software we have. We invite all of you guys to use the software yourself and learn about the opportunities. Our goal here is to provide value and build relationships, because value relationships lead to deals. And that is what we want to do here. But you do that by providing value. So my name is Chris Lopez. I am a local investor here in Denver. I'm also the co-founder of Property Llama. I've also been an investor-friendly realtor for quite a few years now. And I run the Denver Real Estate Investing podcast, where I do a lot of discussions on local trends, local deals, and networking with local movers and shakers. And a lot of the concepts I focus on, especially around that wealth building concept I mentioned earlier, that is a national topic. And I've had the privilege of teaching on Bigger Pockets, which is like the biggest real estate website out there, or the biggest real estate investing website out there. Because they're like, hey, this topic you're talking about, it's great here in Denver, but our other audiences want to listen to it. Can you come teach it? So huge privilege on here. And I really love focusing on, hey, where are the big trends and the big opportunities? So disclaimer on here, we are not your CPAs, we're not your lawyers, we're not your financial advisors. We will be going through data, we'll be doing modeling, we'll be making some forward-looking statements, and it's all based off of information that we have researched ourselves. But always go out there and research it yourself and verify it with your trusted team so you make the best decision. All right, and so I want to give a quick story about Matt too. Matt, tell us about yourself, man.
Hey there. So I'm a recovering full-time musician. Been investing in real estate since about 2007 when my daughter was coming into the world and did not have a lot of financial stability as a freelance musician. So knew you could make some good money in real estate. So that's where I started. But yeah, there you go. I'm a drummer. I still play. You can't work that completely out of your system. So I still get out and play a bit. But it's now just more for fun, not for making dollars. And so, like I say, started in 2007. I've done flips, buy and holds. That's a house I owned for a while. There's a 4-unit building I rehabbed with a partner of mine. So I've just done a bunch of different styles of deals. I'm also a licensed broker. And so there's a house I sold for my father-in-law. So kind of did like an investor type deal on that. Just get in there, clean it up a bit, right? And help get him top dollar. So I help people in that way. And now I'm just like excited to be on this team with Chris Lopez here. Like I say, we reach out to investors. We just try to add clarity, help people understand their current situation, where they're currently at, get to know them, their goals, and then help people plot the best path forward for them. So.
Great. All right. So let's jump into the first part of the agenda, which is macro trends. And I think it's always important to look at, hey, let's look at history. And then we can look forward. So here's a great quote from Mark Twain that says, history doesn't repeat itself, but it often rhymes. I think it's so true, especially what we're seeing the real estate cycle now. It's not going to be an exact blueprint of 2008, but there are a lot of similarities or a lot of rhymes, as he would say. So we're going to go through and actually look at this macro view. So this is a price chart of Denver from 1973 to about 2023. That solid line on top is homes. The dashed line below it is condos. And so you can see here, I've highlighted where the crash was. So, if you look back there, and it's actually really hard to see right now, this is the gigantic crash, that happened back in 2007, 2008 timeframe that, freaked everyone out. Now, looking back at it, it is a lot smaller now. Like, that is a perspective of things. Like, yes, bad things happen, but then look where the real estate market has gone. And after that happened, we had massive appreciation, massive rent growth, which a lot of us here took advantage of. A lot of you guys on the webinar did as well. And that's what happened. So that's the very big, like 50,000 foot view. Now rewind it a little bit and go through a key concept I learned, because back in about 2002, I read Rich Dad Poor Dad. Have you guys read that book?
Yes.
All right.
Yes.
Have most guys in the firehouses read that book?
I think so.
Good. So a lot of you guys can relate to it. Like, that book is light on details, but man, it is powerful at shifting like your concepts and your paradigm, which is exactly what it did for me. It was like a 2x4 across my face. And I went to Virginia Tech for two things, ROTC and engineering. Well, within about 9 weeks there, I realized, none of those were for me. And I hit a funk, but Rich Dad Poor Dad got me open up to, wow, there's entrepreneurship, there's investing, there's a whole new world that got me excited again about what I could do. So I became obsessed with financial freedom. I wanted to figure out how I could go out there and, make a bunch of money and have a good lifestyle and retire one day. Punchline is I actually graduated college not needing a job. Now, I wasn't some, Silicon Valley millionaire, but I was making $30,000 a year 20 years ago as a young single 20-year-old. Good money. I could survive off that and live a pretty good life. And the reason I was able to go out there and graduate not needing a job is because I got attached, or I rode the internet wave. I wanted to do real estate back then, but didn't have the cash, nor do we have the internet back then. But this was like early days of internet, like AOL CD-ROM days. And I got into internet marketing and growing some businesses on there. And I rode that gigantic internet wave, which is what allowed me to go out there and retire. And one of my not retire, but graduate college not needing a job. And so one of the big lessons I learned, I file these away as like a Lopez law in my mind. So a Lopez law was the trend is your friend. Big saying in stock market trading, right? But when it comes to like businesses and investing, I realized, hey, if you just look at this big freaking obvious trend and ride it, you go with the trend, it makes up for a lot of the mess ups along. And I rode that on the internet. And that's also what I rode on doing real estate as well. And as I said, I learned that phrase in day trading, and I was horrible day trading. I did not make money at that. And that's when I realized, hey, I want to focus on real estate, because so many of these people I met through my internet marketing business, they were, much more successful, a lot bigger net worth than I did. A commonality was they owned businesses and they owned real estate. I met a couple people that got it through stock trading. I met way more people who got successful through real estate investing. I was like, oh, I'm going to learn from these 100 people that are richer than me. So when the internet, my internet business subsided, just time to move on for trend reasons and business partnership reasons, I knew it was time to get back into real estate investing. I was looking for a new career, and I kind of relearned, hey, real estate's where I want to be. So I bought my first property here in 2011. It was a 2-bedroom, 2-bathroom condo for about $67,000. Now, while this was just, I'll say ignorance on fire, where I knew, hey, I need a place to live. Things are cheap. Let me go buy a place. And I bought it, like I said, for $67,000. And in the previous crash, or the previous high back here, it was trading in the $200,000 range. So I got it on sale for like 2/3 off. And then for the next couple of years, I didn't really do much in real estate. I was living there, learning the basics, but still focused on some other items. And in 2014, that's when I got bit by the real estate bug. That's when I was like, wow, you know what? I got to go all in on here. I go full time. And so I went back, got serious about it, wrote my business plan, say, my goal is to go out there. I want to create $10,000 a month in passive income through real estate investing. So I did the math and said, hey, my condo, when it's paid off, will make me about $700 a month or $8,500 a year. So I needed 14.2 paid off condos of what I had, and I had one. So that reality check hit me hard. I realized, okay, I got this condo and I bought it for 0% down. I bought like the amazing deal out there everyone wants to buy. And I bought an amazing deal, but I realized, how can I go out there and get another 13 or 14? I realized I had a really hard time doing that. And I don't have $750,000 to go out there and buy these deals. So this got me focused back to what I learned in my internet days. Let me focus on learn before I earn. I knew real estate was the way to go out there and get the vehicle. I already bought a successful rental property. How can I scale that? And how can I replicate that, right? And so I want to go back out there and learn more about this. And I'm a big believer in finding mentors. For me, mentors have always been like the key part of my cheat codes in life, for business, for investing, for whatever it is. And I found a guy out here, Charles Roberts, awesome investor, one of the co-founders of Your Castle Real Estate, and just has a great reputation around town. And Charles taught me a very important concept. And this concept is called return on equity. And so he used to teach some very advanced classes. And this was a 3-hour class that he used to teach. So this was an intense 3-hour class. And it was just spreadsheets and graphs and like a 200-page slide deck of things like this. This was meaty topics, but it was just this fire hose of knowledge. And I literally sat in that class like 5 times. Then I felt like, oh, I kind of learned the concept. I felt confident with it. And I was talking about, how do you go out there and not just find a great deal, but keep your money working hard for you? So once I finally got this topic click for me, I immediately reviewed my return on equity. And this brings us to the second agenda item, which is, in my eyes, the most important wealth building technique, which is your return on equity. So I got started in 2014. I spent a couple years learning, getting into the market, learning from Charles, other mentors. And in 2017, I pulled the trigger to start maximizing my return on equity. Now I'm showing you on here Because when I got really serious about it and started making my moves, I was already more than about halfway through this upswing of this market cycle. And so this is where I got started, where I got serious about my business. And so let me go back to the software we have, which is called Property Llama. And I'm actually going to show you the condo I have in there and show you what I did with the property. It's much easier to show you the example than try to explain all the details like Charles did in his class. So Property Llama is software that we have built here, and it's not meant for helping you analyze how to buy a property. We built it to help you analyze what to do with the property once you've owned it. So we're going to be using this a lot throughout the webinar, and it's free. People can go create a free account. But this is the condo I had, and I'm going to actually dive into a little deeper on here. I'm going to give you the very, very quick highlight on here. So what I did here is I entered my property into the software to show you what it looked like in 2017. So back then it was worth about $230,000, and it was renting for about $1,300 a month. Now, again, I bought this place for $67,000. I bought for $67,000 and rents for $1,100. Now, fast forward 5, 6, 7 years, the prices had tripled. They had 3x'd, and rents had gone up by about 30%. So lots of appreciation and modest rent growth.
And this is where a lot of people will just look at their rentals and think, I'm crushing it, right?
Yeah. Yep.
And in a lot of ways you are, but you're just looking at it in terms of like cash flow appreciation. But what we're going to get into right here is look at how much equity is trapped in that condo.
Yeah, so we're going to zoom in. So I have about $200,000. So that's, price minus my $30,000 loan balance. But Matt hit the nail on the head. I have a 7.42% return equity. So the way this is calculated is it takes the 4 ways to make money in real estate and says, hey, in 2017, the next 12 months, we are projecting that you're going to make about $7,000 in appreciation, about $5,000 in paying down the principal on your debt, about $2,500 that year in cash flow after all expenses and everything, and about $500 that year in depreciation or tax benefits. So about $15,000 total, and we take that $15,000 divided by about 200,000. Well, that gives us our 7.5% return equity. All right, so guys, when you hear making about 7.5% return on this property, what's your reaction?
Yeah.
That's a good sound effect, Paul.
Yeah, I mean,
Jamin, you got a funny sound to
Yeah,
make?
you gotta top that, man. You gotta top that.
I don't know any funny sounds, but I look at a CD right now and you're like 5%, right? So
Yeah,
but you got all that equity that's not working for you.
exactly.
Yeah.
And back then, CDs were not paying 5%.
Right.
But one of my mentors, Charles, said, hey, if you're making about the same, he used the stock market as his like baseline rate of returns. Hey, if my real estate's making the same amount as a historical stock market return, which is 8, 9, 10%, he goes, why should I be in real estate? Like if I can have the same thing where, hey, no headaches, no tenants, no liability, no loans, I'll be in the stock market. And so that stuck with me. I was like, holy crap. I am making actually a little bit less than what the stock market is doing right now. And that was a wake up call to me. So what I did was I utilized a 1031 exchange. I know Paul's going to talk about this more in a minute, but that's a really great way to go out there, take your equity, sell the property, take the proceeds without having to pay tax on it that day, and then roll that all into a bigger and better property. So one of the keys out there is, hey, go out there and find a better property to roll those proceeds in there. So I'm going to click this 1031 button. And then, back then, I think it was a 3.5 rate at a 6% cap rate property at 25% down. The good old easy days of real estate investing.
Yeah, sign me up for that deal.
Right.
So this software will model it for you. Again, this is all for modeling, helping you understand what the power can do for you. So I'm going to just drill in right here. The right-hand side is my condo. So I was making about 8% return on my condo. Now, when I bought this new fourplex, so I sold this condo, took that $200,000 minus some transaction cost and threw an extra about $40,000 in cash I had, and I bought a fourplex in Westminster, Colorado. And so it was a great fourplex, performing very well. But you can see two things happen here. I re-leveraged and I bought a better rental property. Now my money went from a 7.5% to about a 24%. So it 3x my money. my cash flow went from about $2,500 a year to about $15,000 a year. So I had a 5x in cash flow. And then your net operating income, which is once the property is paid off, that went from like $9,000 to $48,000. I view that as retirement income. So the punchline here is, and we can go through all the details, but I don't put you guys to sleep. This is why you can go create your own free account and sit down with Paul and Jim and go through numbers. But you can see here, I'm just getting better growth and better cash flow, which is what we want as real estate investors, right?
Absolutely.
So that right there was just a huge like eye opener to me. And once I did that transaction, or once I did the numbers, like, holy smokes, I got to do this. So I sold the condo, bought the fourplex, and then went out there and had an amazing opportunity for myself. Now, this is where I want to take a break because we're keeping this very high level right now. We're talking trends. We're talking I probably put half you guys to sleep with a lot of numbers on the spreadsheet there. We're talking software. Understand real estate investing is a team sport. And this is why we offer a portfolio analysis session with everyone out there. It's free. Software is free. Sit down with Matt, sit down with Paul, sit down with Jamin. Go out there and actually understand your portfolio and help you move all these parts together. Now, Paul, you and I sat down, it was last year at this point, like 6 months ago, 8 months ago?
Yeah, about that time.
Yeah, how was it?
It was great. Yeah.
Was it a sales pitch? Was it valuable?
It was really valuable because I was stale. I came to you guys and I didn't know what to do. I was stuck and I wasn't progressing anymore and I didn't know, what to do and where to go. And, we put the properties all into Property Llama, evaluated what the equity was in there and, what moves to make. So I've been looking at, different options and looking at funds now and liquidating some of the properties that I have and moving into a more passive investment strategy. So I want to kind of be more hands off, but at the same time, I still want to do a little bit investing on the outside. But the majority of this is looking at the opportunity that's coming up right now and looking at some of these funds. When you went back to 2008, I didn't know what was going on. And I just kind of started educating myself and took advantage of not even knowing I was taking advantage of a great opportunity, which we're in right now too. So history teaches you a lot of lessons. You got to look back and, looking at that chart that you showed me, I see it starting to level off again. There's an opportunity coming. It's very clear. And so that's why we're really accelerating the stuff that we're doing by educating people like, hey, you know what? Now is your opportunity. I had my opportunity. I didn't even know it. I want
to talk about that too, because like you, there's a very great part of your story I want to make sure we highlight here. Because I talked about my return equity. Hey, I sold that condo, bought the fourplex.
Right.
You did it on steroids.
Yes.
Give the quick, talk about what you did there. Because it was phenomenal.
Yeah. It was, I just started reading books and I was like, you know what? I feel like there's an opportunity here. And I wanted to get into commercial investing. Didn't know how to do it. Didn't know the first steps. And then I went to a commercial broker, started talking to him about 2013. We had some houses that we inherited and we had a equity in our primary residence and some of the houses we inherited. And I wanted to know how to use that. I didn't know how to use it at the time. I signed up with this broker, a great guy, and he sat down with us and just ran us through some scenarios and put up some buildings. And I'm like, wow, there's no way we can do this. And he was like, absolutely there is. And so we got the money, pulled the equity out of our houses.
Yep. And so you took the money out of your primary residence and your rental equity, right?
Yes, about $300,000.
And that was your down payment on?
Yes, on a 11-unit apartment building. First building, I think it was 2014. So we just on that chart you were showing, it was just starting to go crazy. So, you can see that right around 2013, we just took advantage of that ride right there. And so in a year and a day, he would come to me and say, it's time to sell. And I'm like, what? Wait a second. No, we just got into this thing. And he's like, well, look how much equity you've already built up. You're ready to buy the next big building. So we did it. And we did it over and we did it over and over and over again.
And a year and a day, it's for capital gains tax. Were you 1031ing or were you just selling?
Yeah, 1031.
Oh, you were 1031
Yeah,
too? Taking
advantage of that free interest-free loan from the government. No payments. So took advantage of that. And you just can buy that bigger property. You don't have to buy equal to or greater than the property that you're selling. So that's what we did. And we just kept growing and growing. And before we knew it, we had multiple apartment buildings, retail centers, and it was on steroids. And that was the ride we took. And now I see that chart leveling off and here comes the next opportunity.
And I mean, you took $300,000 from your HELOC on your primary and a cash out refi on the rental, and you turned that into a multi-million-dollar rental portfolio.
Correct.
Which is nuts. And again, a lot of it was he was using equity.
Yes.
Some of his own money got put in their way, but he learned, he focused on return equity, and you rode the trend.
Yep.
And got a good mentor in there. That broker.
Oh, yeah, your broker. I mean, I know him. He's top notch.
Well, the book I was reading, it was like, every book I read, it was find the people smarter, surround yourself with a team. Real estate investing is a team sport. And I think that's what ties in firefighters. We're used to a team sport. And, that's what we do. We work as a team together, and they've got to involve that in the real estate investing career. Surround yourself with a lot of people. And that's what Jamin and I are doing right now, is trying to build this community of people like-minded that want to, support their retirement, do better when they retire, and have a nest egg there that maybe they don't even have to touch their retirement for a while, and they just live off of passive income and can do the things they want to do in retirement. They've earned it.
So what this led to here was, you heard Paul's story. I had the same thing. I had that condo, started doing that. I turned about $100,000 of cash plus up equity into over $1 million in equity just from that one transaction by return equity and riding the trend like Paul did. But here's what was so fascinating. Like I said, I get obsessive. Like, I have a little OCD me when it comes to like things. And I was like, return equity. I was like, holy smokes, like this changed my life as a real estate investor. I actually can see I can retire one day. Like, this is amazing. I was like, other people need to know about this. Other people need to know about this concept because people don't talk about this on the internet. So I built a lot of spreadsheets, and I did hundreds, if not thousands, of property reviews on looking at return equity with clients. And you can see here, a very complex spreadsheet. You're seeing about a fifth of the tabs right there. There was like 25 tabs in a spreadsheet, and it was complex. It was great until it was not great, because spreadsheets break, they get messy. And this was actually the precursor that eventually led us into building this property llama tool that you saw. So I'm sharing that with you because all of this tools we're using now was built out of needs for originally me as an investor, and also a lot of my clients as well. Like Paul, like Jamin, like Matt, I have built an investor-friendly broker business, and I really honed in on the return on equity. And so I had so much interest on there from my clients, and they got so much value from learning these concepts that just led to us transacting hundreds of millions of dollars in sales to help people like what Paul and Matt did here to trade up their portfolio. So built a really cool team here called the Envision Advisors. We had 9 agents, and we did tons of transactions really focused on return on equity. And, the biggest compliment I always get is when I can hear success stories like, hey, I know Paul now. I didn't know Paul 10 years ago. I wasn't part of his journey, but I was a part of this Jeff White's journey. He came to me, helped him start buying his properties. He did house hacking. He did return equity. And last year, he retired from his full-time job at like 39 or 40 years old with $100,000 a year in rental income by focusing on return on equity.
And he did that in like under a decade, around like 8 years.
I think he started in 2016 or 2017.
Yeah, truly inspiring.
Yeah. And so, use that exactly right, because a lot of people are in different parts of their real estate investing journey. No matter where you are along the journey, there are opportunities out there to go out there and do it. All right, so let's talk about some of these other big macro trends to focus on. And the next 2008, the next crash. People all the time ask me, hey, Chris, hey, Matt, is there going to be another crash like 2008? Well, it depends. So the $1 million question is, our prices are about to crash. So I'm a big believer in, hey, let's gather all the facts and let's look at the trends. So the punchline here is the appreciation party is over. Here's that same chart, but now I've highlighted where it's flattening off. So the last couple of years since COVID, these were kind of like the unicorn years. This is where we just almost went vertical with prices and growth. That can't last forever. That party, it is over. But just because prices go high doesn't mean prices crash. So what we're seeing here is appreciation is probably going to level off and be very modest or below appreciation. My prediction is that we'll see 2 to 4% below average appreciation next couple of years. I just looked at the stats for Denver last week. We're about 3% year over year. So right in that. So not hyper growth and also no big crash. And if you look at all the big data from, Zillow, Black Knight, Freddie Mac, these big groups, they all kind of have the same idea in the trends that, hey, prices dipped a little bit, actually like at the end of 2022, early 2023, and they all forecast modest appreciation. But aside from appreciation, there's other headwinds going on right now in the marketplace that has changed the landscape of investing. Rents are flattening. They're not declining, but they are flattening. So we had huge rent growth. If you look at this bottom chart here, this is rent growth we've had since, 2012. It's been a big growth here. Well, now vacancy is starting to go up a little bit, which means rent growth will flatten. No. The other thing, has anyone gotten their property tax bills?
Yeah.
Yeah. Just tried to dispute every single one of them.
Did you have any look at it?
One.
Yeah, I bet it's zero.
Yeah.
Did you guys have any luck?
I knew it was going to be a zoo. Everyone was jumping in there, and yeah, it was just like look at the appreciation. With that huge appreciation comes the tax bill.
Yeah.
Just a fact of life.
You knew that pain was coming.
Yeah.
It was coming.
Yeah.
and here it is.
So property taxes have increased, which, hey, that's just another expense on the property. Property insurance, holy smokes, another increase. Legislative headwinds as well. If you guys want to do a deep dive, we did a podcast last year with a landlord advocacy group. And you went through the 9 laws that got passed last year. All the intents are great. They want to go out there and really make sure that the tenants are being treated fairly. So, great intent, but it creates a lot of headaches and some unintended consequences downstream for both the landlord and the tenants. So we got unfriendly legislation, which can, again, hurt your operating income, hurt the returns on there, and it's create more headaches as landlords.
Yeah, and that was great too. I watched that webinar, and I went back to my leases and went, oh no, maybe there's a few things I need to fix here. And in discussions with Jamin and I, with some of the guys, they were talking about some stuff where I was like, oh, hold on a second.
You're like, time out!
Yeah, back up. Have you heard about the latest legislation? What you're charging for, pet rent, how much you can take for a deposit on a monthly basis, up front, how much fees you can take. So they've really regulated that. And, we opened up his eyes. He was like, oh gosh, I got to go back. And, he was throwing his money into one account, commingling money with stuff. So we were like, hey, wake up. You got to, separate some of that stuff and pay attention to your leases.
So yeah, PSA here. That's such a great point. If you take nothing else from this webinar away and you own a rental, you're buying a rental, make sure you're up to speed on here, because it's made it so that I think the self-managing landlord, oh my goodness, like it is such a hard thing to stay on top of all these rules and regulations. So I recommend, hey, get a property manager, or if you're not going to, make sure you know these rules, because people are getting pinched and they're getting in trouble right now.
Yes.
So PSA right there. All right. So our prediction, there is no 2008-like crash happening in residential properties. And what this means is, hey, there's no crash. But the fact is, hey, it's just a lot tougher to go out there and find cash flowing properties in today's market. It's like to say, it's like the easy days of buying rental properties are no longer there. Does it mean there's no opportunity? No, absolutely not. We've done some classes here, especially around house hacking, especially around firefighters being able to live and then get an investment property near where they work. Like, there are some great opportunities. It's just changed, but it's not as easy as it used to be. So with all the fact here that, hey, now it's hard to go out there and buy a new rental property, that means for the current properties we have, it's hard to go out there and maximize your return equity by selling your property and buying a new property. So we're actually going to talk about use one of Matt's properties here to highlight what's changed in the market. Now, as Matt talked about in his story, he is a musician turned real estate millionaire. And you started investing, it was 2007, right, Matt?
Yeah, it was 2007, earned before I learned, started reading some books, studying the market, figuring out how to get into the mess that was happening there. And people thought I was crazy.
Yeah. But you can see the same thing, the wave I rode, the wave Paul rode, he did the same thing. Hey, he got in here and he wrote it, $25,000, lots of hustle, now $1 million plus portfolio. So we're going to go over here to one of Matt's rental properties. And so this is actually one that, let's see, Matt, you bought this one in 2012, about $125,000.
Yep.
Now, today it's worth about $480,000. And so it's been, 12 years since you bought it. And I think at some point along the way, you did a cash out refinance, right? To pull out some money and you bought other properties with it, right?
Yeah. So that was my little trick that I used for kind of maximizing that return on equity, was just pull out some trapped equity.
Right.
But that's back when interest rates were pretty cheap. So
Well, let's,
that was easier to do.
Let's actually, I jumped the gun here. So your return equity now is about just under 8%.
Mhm.
And this is a very common number we see for people who bought rentals last 5 or 10 years. That 7, 8, 9% is where a lot of times they fall in their return equity. Again, not good, not bad, but just that's a fact. And this is a big reason why I would love if you got your properties in a Property Llama and sat down in the PA session, because you'll get your head wrapped around on how your numbers are performing today. So
Yeah, and
cash
what
out
a
refis,
great problem to have, right? Oh,
Right.
boo-hoo, I've got all this trapped equity and my return on equity is low.
Which shoulder do you want to cry on,
Yeah,
that? Left or right?
Neither.
Neither?
This is
Oh,
a-
man.
This is a great problem to have. So, yeah, so this one, doing a cash out refinance, like we're saying, like last year, was just going to be terrible. Like we talked about the
Let's run the
high
numbers
interest
on
rates. We're not making this conducive.
here. So you were looking at like an 8% cash out
Sure,
refi?
call it an 8.
Yeah. So this means, hey, he's going to put a new loan on this property. So new debt at the new rate, which is about 8%. Go out there, buy new property. I think 6% is a good cap rate, right?
That'd be good. Better than what I was sitting at.
If you can find that.
Yeah.
And then here's the thing too. So this is just a simple way to model these concepts on here. So we're assuming Matt's going to leave 35% equity in the current property and then take the money he pulls out and do a 35% down payment. Now, minimum is usually 25% equity. Anyone want to guess as to why we're doing 35% down?
Risk for the lender.
Yes. Ding, ding, ding.
Risk for the lender and trying to get the property to cash flow
Yep.
at an 8% interest
Yeah.
rate.
Trying.
Trying.
Lender's going to make his money one way or the other.
Yeah, so we're going to launch a scenario on here. So he's getting new debt on current property, 8%, buying a new property at 8%. And here is what it would show. We're going from Mobile, which is Mobile Street here, and he's going from a 7.5% return equity down to a 5%. His cash flow is going from a positive 6,000 to a negative 11,000. Matt, why didn't you do this move?
I guess I'm just checking. Didn't have the stones to do this one.
So you can see here what happened was, and this is where it's cool because in the software it'll break down how these are performing. And so the refinance mobile rental property, you can see here, it's cash flowing a negative $1,000 a month. Why? Well, because you're putting new debt on a property that's no longer a really good rental, and the rental income just can't pay for the debt.
Yeah.
And then the new property you're buying, it is going to cash flow about $100 a month. Hey, that's great, right? But the problem here you've got a blended negative cash flow.
Well, and keep in mind that's provided I could have found a 6 cap on that new purchase too.
You're buying in Pueblo.
Right.
Yeah.
Did I tell you that, by the way?
You're buying.
You're buying in
Yeah,
Pueblo.
exactly.
Welcome to Pueblo.
In the suburbs of Pueblo.
And so you can see here again, it's just not working anymore. So what type of options does that create then? So where's the opportunity? And a big mental shift that took me a while to go through as a real estate investor was, people like, oh man, Paul, I can't do what you did. Matt, I can't do what you did. Lopez, I can't do what you did. Yeah, you can't do the exact same thing. You're not going to repeat it, but you can rhyme. When one opportunity closes and the interest rates slam the door in our face, another door always opens up. Like that is the reality of, entrepreneurship. That's the reality of real estate investing. And that's one of the great things about living in America. There is always opportunities to go out there if you're willing to learn and hustle and adapt your strategy. So the high interest rates are not causing a price crash in residential properties because we all have 30-year fixed. My primary is at 2.5. What's your primary at, Paul?
About 3.25.
3.25?
2.9.
2.9?
2875.
28. All 30-year fixed, right?
Yep.
Okay.
Golden handcuffs.
Yes. But we don't get that type of debt on commercial properties. So you see these big apartment buildings, you see the big development projects, they have floating rate debt. Now they are getting distressed. They're the ones where, that's where we're seeing the prices crash. Because in 2008, we didn't see prices crash. Excuse me. So this is a chart here of multifamily prices in Denver. This green line is duplexes, triplexes, fourplexes. So these are properties you can go out there and get 30-year fixed debt on, like my fourplex with 3.5% rate on there. This dashed line at the bottom, these are the 5+ apartment buildings. So these are commercial multifamily, and these are where you can't get 30-year fixed debt on. So you can see both of these in 2007, 8, 9. There was a small decline, but nothing like the crash we had, and just a great march of increasing prices, increasing rents, and they're going up and up and up. Now, at the end of 2021, pop quiz, what happened?
Interest rates went up.
Yeah, so you can see when interest rates went to like 0 here,
Right.
Prices shot up, especially there. But then the rates started going up, and man, prices went down. I mean, this is your typical like pyramid of like prices go up, prices go down. And so look at this. Right now, we are buying properties. We're seeing properties at like 2018 prices. Actually, this chart's like 6 months old. It's like 2017 prices now. That's where the opportunity is. So here's an example of a property. This is in northern Denver on Samuel Drive. It's a 32-unit apartment building, and this is a deal that both Matt and I have invested in. And this was a property that got pinched on there. So typical building, whether it's a building or a house, we're going to buy, hey, I can get it for underpriced. It's outdated. I can go on there, update it, increase rents. So this is the remodeled pics here. This is not how we bought it, but this is the remodeled pics. And so when you look at what Matt did with his property on here, and I'll just show you for an example. So this is, I'm skipping a few steps in the software here. So on the left here is that same Mobile Street property looked at, low return equity. If Matt were to sell that, and then we take out some transaction costs, we take out some tax costs on here, and then reinvest the proceeds, look what happens. His return equity has about tripled. His cash flow has about doubled. Plus, are you managing that property, Matt?
I'm not. I'm reading the updates as they appear in my inbox.
Sleeping all night with no phone
He's
calls.
sipping his cup of coffee, reading the update, right?
Yeah, I've not gotten one Friday 6 p.m. phone call from a
No
tenant.
midnight plumbing.
Yeah. So you can see here, there is always opportunity in the marketplace. That's the punchline I want to say. Hey, there is opportunity, and you have to understand the trends, and you have to understand what current opportunities you have in your portfolio. And that's why our big pro like, hey, get your software or get your data in the software and sit down and have a cup of coffee with us. Let's sit down and talk about your portfolio. So from a very fundamental, we've all heard this, watching the Wall Street movies growing up, buy low, sell high, right? And so this is a very simplistic graph of that, of where so many people like me, Matt, Paul, Jamin, we have equity in our properties here that have grown. Some opportunities here to sell high and then reinvest some of that money buying low in apartment buildings or other distressed asset classes. We're using apartments, for example. There's other opportunities as well, but use that idea like, hey, I got so much equity. Should I sell high on one or two of these properties and go reinvest elsewhere? So I'm going to give you an example here on the Samuel Drive property because we bought this in November 23. So actually right here. And this is why prices were still declining for multifamily.
November 22.
Thank you. You're right. November 22.
It was done. It was finished in a year later in November
Yes.
2023.
That's right. We're in 2024 now, aren't we?
Time is flying, right, folks?
Yes, it is.
So this is a quote everyone knows, but it's hard to actually internalize and act on. Be fearful when others are greedy, and be greedy when others are fearful. Amazing quote from Warren Buffett, right? And what are people saying about real estate right now?
They are scared out of their minds.
Just
Yes.
like they were in 2008, though,
Yeah.
right?
Yep.
Yeah.
I remember this quote all the time, and I think about it all the time, and especially right now when I sat down with you guys and put all of the portfolio into Property Llama and was like, I'm sitting on a bunch of equity. What am I going to go into? And, it's going to shift all the time. So now the prime time is apartment buildings, value add, especially what we're looking at. And there's a lot of money to be made there. So,
Yep.
And this is one of the conversations we just had with one of the South Metro firefighters, was directing them into an apartment complex like this.
Right. Yeah, he saw it.
And so if you want to go out there, depending on, and there's opportunities elsewhere because, someone's an apartment. You're building an ADU right now on your properties.
Yes.
You might be investing in another deal to build something. Like there's opportunities out there. The punchline here is it's just the landscape has changed from what we knew. That's what we want you to take away from here.
Right.
So for deals like the apartment building deals, they are different. Matt and I did not go out there and buy that Samuel Drive apartment. It wasn't just he and I buying that property. that took about $2 million in equity or $2 million down payment. I threw in about $50,000 or $30,000.
I did 50.
You did 50. So, hey, we made up a very small slice of this. So to buy these bigger buildings, it takes a lot more money, which I wish I had $2 million in my checking account. I don't. Matt doesn't either.
Nope.
But we can buy into it with other investors. But the other thing is too, is like, hey, we've all been out there, we've operated our residential rental properties. They're great. You can go in there and add value, and you can run it yourself as a solopreneur or solo investor. These bigger deals, it's very hard to go out there and do it as a solopreneur or solo investor. That is where like, hey, the partnerships, and really like we all know real estate investing is a team sport. These bigger deals and this new market cycle is even more of a team sport now than it was in the last market cycle.
Yeah, and that's what a lot of people have been coming up and asking me, how do I get into apartment? I want to buy commercial multifamily. And no, it's not going to be the same as it was for me back in 2014 when I was buying by myself. Now is the time to look at the team, and you got to get in with 35% down, and it's not cash flowing like they used to. Rents aren't increasing like they were. So when you get in with a team and can take down one of these big properties, especially in a value add, you're looking at a great return and another option rather than just going in by yourself and buying.
I couldn't agree more. That's where we're very excited about this. Like you're saying, who are we teaming up with? We're teaming up with, on this particular deal, just a rock star operator.
Yes.
Someone who's controlling costs in construction. They have warehouses where they stockpile materials. They have long relationships with different trade groups, right? So they're very much in control of their construction costs.
Yeah.
They're very in control of, like, you make your money on these by increasing your what am I trying to say? No, not your operating expense. Decreasing your operating expenses.
Increasing the rents,
NOI.
decreasing the
NOI. I was
expenses.
thinking ROI. NOI.
Yep.
Net operating income is where you create value in these projects. So somebody who's just far better at that than I am, or Chris is.
Yeah, you got professionals. You got a whole team working, taking down these
So,
buildings.
so Paul, you own a bunch of rental properties. How many employees do you have in Paul's rental business?
Zero.
Jamin, Matt, how many employees do you guys have?
Zero.
So the guy that we partnered with on this deal, he has about 50 employees.
Right.
So different game, different headaches, different scale, right?
Yeah.
So with these deals, oops.
And it's not his first deal either, right?
No,
You've
that's
got a track history of doing this,
Exactly.
just like Matt was saying.
So with these, there are totally different ways to go out there and invest. So rather than you going out there, buying a property, doing the down payment yourself, you're essentially investing with other investors as a limited partner, and that money is pooled together and then pooled with the guy with 50 employees to go out there and find the deal, operate it, do the construction crews, all that. So that's known as like passive investing, syndications, or real estate private equity are the terms that are kind of capture all that. And so here's our fancy graphic to show you, hey, we pool money together and we buy a bigger deal like this. So the whole goal, or one of the goals that we provide here at Property Llama is, number one, we want you to understand how your portfolio is working. It is by far the biggest opportunity that most people have because they have, do you have millions of dollars sitting around in cash? No. But you might be, like a lot of people, you have $1 million or $2 million in equity in your properties. If you think of what Paul did, hey, Paul started with $300,000 in equity 15 years ago. Now that's millions of dollars of equity. It's that same concept. How can you use the equity that works best for you as an investor at your phase in life and in the current market cycle? So let's talk about getting clarity on your current portfolio performance, because this is such an important aspect here. We're talking about where the opportunities are, where the trends are, and now we got to go back and talk about what you can do in your portfolio. So I have boiled it down to, in my mind, there's a big question here. Are you in growth mode or are you in cash flow mode? And by growth mode, I mean, hey, you want more money in the future, or hey, you might be on the younger side, not ready to retire yet. Retirees usually want cash flow. If you're not retired, you're like, oh man, I need more growth so I can retire in 5 or 10 years. I'm in growth mode. What mode are you guys in?
Growth mode here.
Growth.
It's kind of a combination of both. Cash, need the cash. I'm retired, but don't need the cash flow that much. But so I want to keep growing what we have.
Yeah.
And
And it's a combination for a lot of people. A lot of people are like, well, I think both are important, and certainly they are, right? It's just that
absolutely.
at different phases, you're going to be a little more focused on one than the other.
Yeah. And I think one always dominates the other, because part of me says my financial planning background says, hey, if you have all the cash you need to retire, some people say, I'm like, you know what? Congrats, you won. Just pay off these 2 properties and go cruise for 6 months a year, right? That might be it, but one is going to dominate the other. So as you sit down and you're reviewing your portfolio and reviewing your goals, sit down there and have an honest conversation with yourself. Like we did that with one of your firefighters at the coffee a few weeks ago.
Yep.
Planning with his property and doing all this, and he's making some moves on the rental, investing in some of these funds. But he's like, hey, I'm in growth mode, and we gotta do these moves instead. And it was like, it's a very great portfolio move for him.
Right. And it's a really new concept for a lot of these people out there. They've never heard of syndications. And I think I heard of syndications probably 3 years ago and started learning about it and went, oh my God, what an opportunity to step into and not have to do much work. And cash flow, you have a dividend, but the ultimate goal is obviously that 5-year hold at the end, what that ROI is, or the IRR is that you're pulling in. So people need to understand that, do their own due diligence when they're looking at these things, but it's a great option for people with equity in their house that want to step into owning multifamily without lifting a finger.
Yep. So I want to go back over to Property Llama again. And this, so we're going to spend a few minutes here, and Matt's very gracious to let us, use his portfolio, which is a great portfolio and also very representative of many landlords around Denver and Colorado Springs and, other appreciated markets. So I encourage everyone out there to actually do this portfolio analysis, because what investors hardly ever do is look at their global portfolio. Right here, we have all of Matt's directly owned rental properties put into here. We can see, hey, what's the total valuation? What's the total equity? What's your total cash flow? What's your total loan to value? And there's so many metrics we can look in here. And then what we do is say, hey, here's how your portfolio is currently performing. And it's not good, it's not bad. Just, hey, here's a reality check. Because what do most people do? Like, oh, I bought this amazing deal 9 years ago. Awesome.
Yeah.
You know what else was 9 years ago? I used to have a 6-pack 9 years ago. Now I don't. I can't go on 10 anymore, right? The same thing. Yeah, I used to, but living your days around, I'm like, oh yeah, I'm 2 inches higher on my pant size now, right? You have to live in present time. So with the software, we get your numbers present. We get you a global view, and we give you a reality check. And sometimes it's a little harsh, but it's harsh in a good way, because you can go out there and look at how your portfolio is performing.
Yeah, I mean, knowledge is power, right? Like, we're trying to fill this gap that we find in the education space. There's all this stuff about how to go out there and buy your properties, right? How to analyze a purchase. That's all fine and good. But then, like you're saying, okay, now you're 8-10 years down the road. Are you making the best decisions you can with those properties now?
Right. And there's so many people that Jamin and I talk to, the firefighters, that have these investment properties, and they just don't know what to do. They want to be like, they want to grow. I want to, get to that next step, but the market sucks right now. I don't want to buy anything. It's like, no. Look at your equity that you have and what it's currently doing right now, which Property Llama will show you very simply and very quickly, what you're doing right now and what you can do in the next scenario. There is opportunity there, and people need to understand that. Yeah. And that's what we were explaining to people, is that you can grow. There is an opportunity here, especially if you've got equity. You just need to take advantage of it and take that step.
There you go.
All right. So, part of what we do here as we go through people's portfolio is I'm big on written goals. I'm curious out there, and people have to do it if they're listening and watching, how many people have written real estate goals?
I just did mine for the first time.
You did?
When I sent for
Your
the
first
book.
time?
Yeah, that was the first time I've ever done it.
I was putting in Jamin, because Jamin obviously works out, like many people. You have a workout plan written out, right?
I do.
And what I find is like people, they have the workout plan written out, and I'm like, oh, what's your investing plan? Well, I don't have it written out. I'm like, you want to go out there and create a $5 million portfolio, but you won't write out your plan. It's great that you write your workout plan, and you should do that, because what happens? You get results, right? So therefore, you should do it with real estate as well. Yeah.
Agreed.
Yeah, and I just did mine for the first time, like you say, writing a chapter for the book. So Chris puts together this great crowdsourced book called the Colorado Real Estate Investors Guide, right?
Yep.
And write a chapter, get the book, check it out. It's just a whole bunch of investors sharing what's working for them, their ideas, their strategies. And so working with Chris, he's like, yeah, you got to write a chapter
Yeah.
for the book.
Holds you accountable.
Hold you accountable. And I think it is really, like you're saying, just get some clarity. That's all we're going for. Just clarity on where you are, clarity on where you want to go. And then you can start to come up with some actionable items. And
For those
figure out
people that are
path.
stuck, especially like I was, writing those goals down really helped me get some clarity on the next steps I needed to make. Like I've got these properties that I'm like, I don't know what I'm going to do with them. Well, I'm going to sell them and move into that next step of the passive income and invest in funds and just roll them in, roll them over every year. And, you know, I'm going to cash flow off of those now.
There you go. I mean, I guess I started writing down mine when I started utilizing Property Llama, like you said, in about 2022. And then starting to see where my portfolio was at versus the changes I could make. And so I kind of penciled those out, like you say, 10, 15 years. And it's just like, oh, I'm going to go this direction now.
Right.
And so I'll kind of share my goals is like, I think this is such a great exercise because we talk about, hey, the market changes, your rental portfolio changes, but your life changes too. When I bought that first property I mentioned 13, 14 years ago, I wasn't married. I had no kids. I had more time and less money than I do now. Well, now, you know, I'm 42 next month. You know, I had great success in this last market cycle, but now I have a wife. I have 3, you know, young, amazing girls at home, different responsibility. And I also have a lot less time, but I have more money. So I'm like, wow, you know, the market's changed and also my life has changed as well. And I've seen so many investors, they don't sit there to reflect, hey, here's how my life has changed. And I value a lot more my money working harder for me. Like, hey, 10 years ago, hell yeah, I'd go in there and paint a wall of my rental. Now I'm like, I want to do my own house because I'd rather like either be putting together a big deal or I'd rather spend time with my family. Right. So I've reshifted my priorities, which is a really, really good thing to focus on. So I'm selling, should have all my rentals sold by the end of this year, or at least I've turned them all. I just sold a bunch of stocks in January to roll over my IRA into a self-directed IRA so I can go out there and keep investing.
Yeah, that's an awesome way. I've just did that for the first time, and I set up an IRA after I retired and knew that money was going to be for investing. I just didn't know how to do it. So there is, you know, certain laws that you have to follow. It has to be bought by the IRA, so you got to make sure you follow those rules when you do it. But it's a great way to tax-free invest.
Yeah, there are a lot of custodians that make that really simple. I did that with
they'll do all the work for
with
you.
one of my wife's IRAs.
Yeah.
Changed jobs and it was available, and I'd seen the anemic growth she'd had over the last decade, and I was just like, give me that money.
And especially for you like,
I love that word. Yes.
Yeah. And so, went through a custodian. I mean, it really was fairly simple.
And especially for these firefighters, especially in the audience today right now, is you guys are going to have an excellent opportunity when you retire with your 457s to roll that into something different, into an individual retirement account, and get yourself out of the exposure of the stock market, because everything these guys have is in the stock market and they really don't have investments. There's some people with a couple of properties, but they're still over levered in that stock market. Get it out and throw it into some of these funds. It's kind of like a REIT in the stock market on the S&P 500, right? You buy into those and there's hundreds of millions of people in these funds. You can get in and out very easily, but the return's not that great. But when you look at these funds that you can get into on the outside and diversify some of your cash, it is an excellent way to separate everything with, you know, if this crashes over here, this is probably going to do well.
Yeah, you get a little more diversity.
Right.
You can figure out like how much you want to allocate towards those different investments.
Yep,
Right. It's
absolutely.
not all or nothing. Yeah.
Yep.
Now, I want to go to like another, again, I call it Lopez law, and also I think a really just good piece of advice. Like, you know, markets are shifting right now. Some parts of the market are crashing, but this is time to be patient, be prudent. Like, wait until there's a great opportunity and make the move. But at the same time, like, measure twice, cut once. We all know that saying in real estate. So, you know, real estate is not a quick or a cheap asset to transact in. It takes time, and there's fees to transact, way more than, you know, selling something on my Fidelity account, right? But it's worth it if you sit there and understand the market trends, if you sit there and understand the opportunities, if you sit there and understand what your goals are. So our big ask there is go out there and make sure you understand what your portfolio is doing. So feel free to schedule a portfolio analysis. There's a QR code on the screen there. But I know a lot of you guys know Paul, Jamin. Shoot them a text, shoot them an email. We love sitting down and actually sit down there and actually talk about real estate investing goals, grab a cup of coffee, review your portfolio. And that is the way so many people are getting value from their portfolio. And there's opportunities out there. Something like, hey, you know what? Just sit on there and hold that. You might say, I'm going to sell this property and invest in this fund. I was talking to Matt last week. Hey, I looked at the property. I need to go in there and I got to get the rents up and then get the property better performing.
I was thinking about selling that one. And then again, further analysis, it's like, no,
Didn't make sense
I have to keep this one.
Yeah.
So following the numbers. And again, more informed, making informed decisions,
And there's opportunities out there. Like I was talking to another client last week, and he is an investor here in Denver, and he loves owning rental properties. He's like, hey, the numbers stink right now. They're really tough. He's in his 40s, wife, kids, all the typical stuff that many of us have. And he has an IRA, but he partnered with someone else who's a 22-year-old, young and hungry, one to put in all the sweat equity. And he's bringing the money. And this guy's bringing the sweat equity. He's bringing the capital equity. He's bringing the sweat equity. It's a great partnership. And they're both getting great returns. So the point we're stressing here is there is opportunity. But understand your portfolio, understand your goals, understand what makes sense to the market. Because whether you want to invest in a big apartment building or buy another rental or build an ADU on the back of your house like Paul's doing with his properties, there is opportunity, but it has changed. And we are here to help you figure out those opportunities and give you value, and that may allow us to do a deal together one day.
Yeah, talk with the people with knowledge and experience and get out there, follow them, ride their coattails, and that's what we're offering right here is come take advantage of us. Use us.
Worst case scenario is you get a free coffee out of it.
Yeah,
Yes.
right. Sandwich and a coffee.
All right, guys. So I know we went through a lot on here. It's been a jam-packed, hour and a couple minutes that we've done this webinar. What other, is there any other, information, knowledge that you guys want to really stress or wrap up? Or, as we've been working more together, what other things should we make sure people know about out here?
I think it's the team game. I think when I was a younger investor, I kind of shied away from asking for help and trying to bring others in onto the team, just feeling insecure about my own knowledge and things within the business. And the more I've gotten out of that mindset and more into the group mindset and bring other people in, bring partners in and try to learn more, guess what's happened to my real estate investing career, right?
Yeah.
It's gotten better because of it. So don't feel shy or weird about where you are, right? Everyone's going to be at whatever stage you're at. The fact that you're in the game is the most important part.
Yeah.
And then like Paul said, we all get better by leveraging each other in knowledge and experience.
Yeah, and that's kind of wrapping into that is start going to meetups and talking to like-minded people that want to do the same thing. I think that's really empowered me by, meeting you guys, sitting down, going to meetups, going to real estate conferences. That really pumps you up, gets you excited, especially when other people are talking about it. If you're not motivated, those people will motivate you. And if you're stuck, you're going to have somebody going, man, you've got an opportunity you're sitting on. You need to take advantage of it. And that's kind of what Jamin and I are looking at. We see these people with these properties with all kinds of equity in it. And we're just we give them ideas and all of a sudden you can see a light turn on in their head and they get excited. Yep. So if anything, what you're going to take away is start surrounding yourself. If you want to accelerate your real estate investing career, start surrounding yourself with people, like-minded people that are smarter than you, people that have done it. You're going to get motivated. You're going to start learning. And then you're going to see the light and be like, this is the way to go. And you'll do your first deal and then you'll be addicted. And off to the races.
Awesome. Well, that wraps up our webinar here. I covered everything I wanted to. Paul, Jamin, I appreciate your guys' time. Of course, appreciate your time too, Matt. But the opportunity is go out there and talk to other investors, especially your firefighter community. I always appreciate that. I always respect relationships. Always want to make sure we give the most value out there. If anyone has any questions, reach out to any of us here. We're happy to go out there and talk. We've all been on different sides of the journey. Hey, we're on the side where we're asking questions, learning. We'll pay it forward as well, pay it back. Because you know what? That value helps everyone so much in learning and success. And hey, that also leads to people doing deals together as well, which is the name of the game here. So Paul, thank you. Jamin, thank you. Matt, thank you. Jules behind the screen, thank you. Everyone out there watching and listening to the recording and live, thank you very much.
Yeah,
Hope to see you guys soon.
Thank you.
Bye-bye.